Morning, everybody. Welcome to our weekly market update. Today is just Maddie and I. So
Yes.
hang out, Maddie.
Good, thanks. How are you?
Good, thank you.
That's good.
How's everything been in the world of property management?
Property management's always busy.
Yes.
There's never a dull moment. Again, like I said last time, we haven't had the winter lull that we usually experience.
Yep.
Just seems to be getting busier, which is great. I'm not going to complain about it. Just a bit interesting. It's not really following the usual pattern. So I think it's the interest rate rises. People are just holding on to their properties, not selling themselves. Agents aren't taking them off us.
No, there's been a fair few more, and some others, deciding to rent instead of sell and different things.
So been pretty busy still. So we only have 5 online at the moment because we've had a little blitz of leasing them.
Yes.
2 new coming up this week.
Yep.
Actually today. So there's 55 Balmoral Road in Kingston Beach, which should be popular. Nice big house. And then there's 8 Crofton Court, which was recently sold and settled, and we got it back for a rental, so that will be really popular.
A couple of nice ones.
Yes, it'll be good.
Okay, cool. How are we still getting decent application rates?
Yep, really great ones. Even so, it's still pretty well evenly spread across the board. So I think a couple of months ago, people were spreading out more to like Dover, Franklin, Jeeson sort of areas, but you are seeing them creep back into like the closer to Huonville sort of area now. Huonville Signet. Our Signet, 8 Donahue Street in Signet has absolutely gone off, and I think that was because the owner chose to rent it in a decent price bracket.
So it was attractively priced.
Yes, it was. So many applications even before anybody viewed it. So it just goes to show that pricing it is definitely the key to success. But we have had a bit of a slowdown on short-term leases.
Yes.
I mean, 12 months ago, we would have said, doesn't matter what term lease, you'll get somebody anyway. 2 years ago, we would have said, no, 12 months or nothing. And I think we're just coming back to that. 6 months is still like a little bit popular, but it's fading out. So, 12 months is definitely
somebody's got to put the effort and cost into moving and mucking around. They want to make sure they're there for a while.
That's exactly right. They want security. I mean, some people are even asking for 24 months, but we just recommend 12.
Are you finding if there is a 24-month advertised, does that get more interest from tenants than a 12-month?
We don't usually advertise 24 months. We prefer the 12 just to make sure that both parties are happy. But we are getting a lot more people ask for 24 months because they want to know that they can stay there for a longer period of time. Even the people that are building, they want 24 months so they know that they don't have to rush. Interesting.
And I think that's a good sign that there's a lot of tenants looking, that when you get an attractively priced property, it does get a lot of applications.
So many.
We've noticed a lot of the properties that are advertised for rent are actually getting a lot of engagement. So there's a lot of people on the social media sites and actually interacting with them. So there's a lot of eyeballs out there looking for places of that. So I guess it's quite similar in the sales space at the moment, where we've had a busy couple of weeks in relation, like it's picked up a little bit after the election, and we're finding that the attractively priced properties are going really crazy still, and but it's a very price sensitive market right through. So there's a lot of buyers. We've got a huge database of buyers looking, and they're quite active when something appeals, but they're sitting on the fence if it's sort of a little bit over or even fairly priced. A lot of the time they're sitting on the fence. They're sort of needing an incentive to take the risk while there's so much negative press out there in relation to interest rates in the market. We've seen America move a huge interest rate rise again last week, another 0.7. So they're going pretty hard over there, and so we're seeing that happening around the world. So it is likely to keep going up for the next year or so, but to what extent? And really, I think the old saying, if it's around that 6% mark, that's about where it should be. So we've had a free money almost for a long time, and it's getting back to normal levels, but still it's going to be a long time before it's up around that 8 or 10% where it sort of was 20 years ago. And it's really, I think, probably once everyone gets used to it, won't worry things too much. So it's still a lot cheaper to buy something than replace it at the moment buy the block and build. So whatever the cost is below replacement, that's going to keep the values sort of sitting around where they are. So generally in the office, we've got a couple of new people which we'll introduce you to over the next couple of weeks, join the team, and we're advertising a couple of positions at the moment that close over the next couple of days. So if you do know of anyone looking, there's a couple of jobs advertised there right now in our administration and sales support roles. So have a look online. They're on our Facebook site, they're on Seek. So if anybody's looking for those, please jump on and act quickly. And other than that, things are going really well. It's probably better than everyone was expecting in both departments a couple of months ago, and seems to be holding quite well. So looking forward to the next few months ahead, and we'll keep updating you with all of those little things as to how it's going. Generally, the market stats, we've been looking at those, and when we looked the other day, our market share has actually been really high over the last 3 months, where we had been slower with sales and then renting properties. We thought it's gone down a little bit, but our market share has actually grown. So the market generally had been quite a bit slower. So we'd outpaced the market by about another 10% more than we were expecting that we would have. And so it's quite an interesting time where we're looking at this quarter, probably the least amount of transactions for sales for many years in the Huon Valley by the look of it, where the way it's tracking at the moment. So anyway, that's a bit of info for you there. Thanks for tuning in and watching to the end of the video, and we'll see you next week on the update.